Cambridge House Live. I'm Vanessa Collette here at the Canadian Investor Conference, Toronto. I'm pleased to be joined by David Franklin, co-founder and managing director of WoodsWater Capital. David, great to have you back on the show.
Yeah, thank you for having me.
Now let's start out just by talking about the Fed's policies. What do you see happening there? I know you've raised the alarm in the past about what's been happening. What's the latest?
Well, in the last Fed meeting, Janet Yellen said that reiterated guidance that they would dial back quantitative easing and leave rates low for an extended period of time.
Considerable period of time.
Considerable period of time.
So what does that mean to you?
So I interpret that as the Fed is having difficulty in a low growth environment that the U.S. is currently in, managing monetary policy. So you've got low growth, you've got the end of quantitative easing probably within the next month, and you're still not at the employment targets, and you're still not at the inflation targets. So I think that the one lever that she can pull is leave rates where they are.
What do you think the market expectations are? Like, do they think that quantitative easing, it seems to me that Wall Street wants the easing to just end.
Right, well, if we talk about the U.S., market expectations, I think are most recently iterated by Bridgewater, which is a large hedge fund in the U.S., and Kyle Bass, who's a well-known hedge fund manager, and they see inflation tame for the next 10 to 20 years.
So it's not going anywhere.
Not going anywhere, and frankly, it looks like the risk is on the deflationary side. So while the U.S. is dialing back their quantitative easing, the rest of the world seems to be amping it up. And I think that describes why we've seen the strength in the U.S. dollar in the last 2 to 3 months.
Yeah, that was my next question. So we're seeing like a really strong U.S. dollar right now.
Right.
Is the U.S. dollar actually strong, or is it just relative to the euro and the yen? It's looking strong.
Well, yeah, I don't know if there's a meaningful distinction between it, but currencies are priced off each other, and so with Japan doubling their monetary base, with Europe on the cusp of a quantitative easing program, China recently injected liquidity into their banks, is likely the beginning of their monetary stimulus. The U.S. dollar is acting as the best horse in the glue factory, so to speak.
Absolutely. Now we've talked, I think the last time you were on the show, we talked about Japan's radical monetary printing experiment. Where does that stand right now?
So they continue forward. They've had a hiccup with a consumption tax that they introduced.
Okay.
So they're kind of putting their foot on the gas and the brake at the same time, which has stalled out the market.
What's the consumption tax about?
It is a way for Japan to balance their budget. And so it's very similar to a GST, a way for them to drive revenue.
Okay.
However, it's contrary to a lot of their stimulus policies. So this is where it's kind of like putting your foot on the gas and the brake at the same time.
Right.
And
it's
so
not good for the engine.
The economy is stuttered in Japan. So, but recently in the last few weeks, the yen dollar cross is breaking out again. So you've seen, again, this strong U.S. dollar is having a huge impact in Japan.
So what do you see going forward for the U.S. dollar? Is it going to remain strong?
Well, I think, in my opinion, it's going to continue to be strong. We haven't seen the beginning of quantitative easing in Europe, weakening their currency. Right. We haven't seen even the beginning of the weakening of the Chinese currency. Japan is well on the way. So if you want a safe haven, a place to store your cash from negative interest rates around the world, the U.S. dollar is looking as the best place right now.
Well, speaking of that, what about gold? How's gold looking? Is that a safe haven as well?
Well, I tell you, I'm speaking on gold later on at the conference, and I think my talk is entitled "This Isn't Your Father's Gold Market." So. We don't see gold reacting. Gold hasn't reacted to bombings in the Middle East. It hasn't reacted to war in Europe. Hasn't reacted to some of the things you would naturally expect it to.
Right.
The only thing that's been reacting to these geopolitical crises has been the U.S. dollar. So just reading the tape, looking at the markets, the U.S. dollar is acting as a safe haven. So so I think that's going to put pressure on gold. I think that's going to put pressure on all the other commodities coming into the end of the year.
Now, what do you think could lead to a breakout? What's going to make gold react to some of these flashpoints that we're seeing between, Gaza, Syria, Ukraine, all these different fronts? What could make gold react?
Well, frankly, gold should be reacting,
Right.
but it's not. And so I think one of the things I think is very positive for gold, if you look at in U.S. dollar terms, it hasn't done much. But when you look at the buyers of gold are all in the emerging markets. Russia continues to add. They're fighting inflation. Brazil is continuing to add. They're fighting inflation. China is now the biggest producer, importer, and consumer of gold. So those are all very positive developments for gold. And I think that the last thing I think is that as we've got to move the pricing mechanism out of the COMEX, out of North America, over to where all the physical gold is, which is in China.
In Shanghai.
That's right.
And we've seen something happen recently in Shanghai. They're settling trades in yuan right now?
That's right. They're settling gold trades in yuan. I was reading this morning they got 56 vaults set up to support this exchange. All the major gold traders are supporting this exchange, and I think it's a natural evolution of the market as we see. Listen, if you're the biggest producer, you want pricing power. If you're the biggest importer, you want pricing power. And if you're the biggest consumer, you want pricing power. So moving the exchange to Shanghai makes a lot of sense for them, and hopefully they gain pricing power in the marketplace.
So let's talk a little bit about platinum and palladium.
Sure.
Some big news with palladium we were talking about just before filming.
That's right. Well, I've been a big platinum bull and palladium bull for some time now. And, for the simple reason that we're very expensive to mine platinum. I've been on the hunt for platinum deposits around the world, and they're very difficult to find. And this morning, we saw the CEO of Norilsk come out and say he's going to try and buy all of the palladium that's sitting at the Russian central bank.
It's quite the statement.
Yeah, he even said he would take it all personally
Wow.
with his own money because he believes so strongly in palladium. And there are geopolitical implications to this. If Russia holds all of the palladium, how will the U.S. Get access to it? And they've even suggested that all of the palladium coming out of the Norilsk mine will go to China.
Wow.
So
we can see a big increase in the price coming, you think?
That's right. Well, we've seen it this year. It had a very strong run up and then corrected back with the U.S. dollar. But all the fundamentals are still there. So I think today, this week, is an excellent time to put some money into palladium.
Now you started WoodsWater Capital with some other colleagues.
Yep.
Now what's the philosophy behind the fund and what are you looking at right now?
Well, our approach, we're a private equity fund focusing on natural resources. And I think now is the perfect time for long-term investors to be looking at resources given the valuations.
Right.
And so our approach is we are looking very much for world-class assets. They are out there and they are trading at pennies on the dollar. So if you have a long-term view, I think this now is a fantastic time to deploy. Even a modest amount of capital into the sector would make you can make a huge dent. And I think there's a lot of commodities out there, despite the slow growth world, that are experiencing deficits.
So you're bullish on the sector?
I'm bullish on the sector.
David, it was fantastic having you back. Thank you for joining us again.
Great, thank you.